Hi, this is MTA. If you're a UK business owner, you might be missing thousands in unclaimed VAT refunds. Today, we uncover the exact rules you must follow in 2026.
If you're running a small or medium-sized business here in the UK, getting your head around VAT on expenses, well, it's not just good practice, is it? It's an absolutely critical financial skill. So today, we're going to walk through exactly how to get it right using some brilliant guidance developed by the expert tax advisors over at My Tax Accountant. Okay, let's kick off with a number that should really have your full attention, £60,000. Now, why that number? Because it's the potential new VAT registration threshold that's projected for 2026. This change means thousands of businesses that are currently flying under the radar will soon be pulled into the VAT system. So mastering your expenses isn't just a good idea, it's become absolutely crucial and you need to start right now. And just so you know, all the information we're about to cover has been meticulously put together by the team at My Tax Accountant. They really specialize in helping business owners just like you navigate the, let's be honest, often tricky waters of UK tax. We've laid this all out to be a really clear journey, from getting the big picture to having a practical plan you can use. We'll start with those big changes coming up, cover the absolute must-know rules, look at what you can and can't claim, tackle some of the more complex scenarios, and then wrap it all up with a checklist to keep you on the straight and narrow. Right then, first up, let's really get to grips with this significant change that's on the horizon and understand exactly why this topic is suddenly so urgent for so many businesses out there. So the crucial point is this: the government is signaling a major drop in the VAT registration threshold, all the way down from the current £90,000. And look, this isn't just a small tweak. A drop into that £60,000 or £70,000 range is going to pull a huge number of sole traders, freelancers, and small limited companies into the VAT system for the very first time. So, with thousands more businesses about to enter the VAT system, what is the number one thing you absolutely have to get right? Well, it all comes down to one thing really: impeccable paperwork. This is the bedrock of the entire system. This really is the golden rule. Honestly, if you only take one thing away from our chat today, let it be this. It is the single, non-negotiable principle you have to build your entire expense process around. And this catches a lot of people out, because a simple credit card receipt just isn't going to be enough. So what does HMRC actually mean by a valid VAT invoice? Well, it's a very specific type of document. It's much more than just a proof of purchase. It's a detailed record that has to contain all the specific information that HMRC legally requires to approve your claim. And believe me, when they say details, they really mean it. HMRC requires all 8 of these items on an invoice to make it valid: a unique number, the supplier's VAT number, your details, the date, a clear description, and a full breakdown of the VAT. Missing just one of these can give HMRC the grounds to reject your entire claim for that purchase. And this is a perfect example of how technology has totally changed compliance. It's no longer good enough to have a paper invoice just filed away in a cabinet. Under the Making Tax Digital rules, these records absolutely must be stored digitally using software that can communicate directly with HMRC. Right, let's get to the part you'll really want to hear. We're going to break down which of your everyday business expenses are actually eligible for a VAT refund and which ones are, well, definite no-goes. Okay, the first major principle is the split between business and personal use. So the crucial point here is that you can only reclaim VAT on the business portion of any expense. Let's say you use your mobile phone 50-50 for business and personal calls. You can only reclaim 50% of the VAT on the bill. And here's the key: you must have a fair and reasonable method for working this out and be able to justify it to HMRC if they ask. Now, this is a big one. It trips up so many businesses. The rules for entertaining your staff are completely different from entertaining your clients. You can generally reclaim the VAT on the cost of a staff Christmas party, for example, as long as it's primarily for them. But taking a client out for lunch? Nope. The VAT on that is not reclaimable. The legislation is actually very, very clear on this. And here's a great tip on vehicle VAT, which, let's face it, is notoriously complex. For a company car that you've purchased, reclaiming the VAT is incredibly difficult. It must be used 100% for business, and that means absolutely no private use, not even commuting. It's much simpler for a leased car, where you can usually reclaim 50% of the VAT. And if you're paying mileage for a personal car, you can reclaim that, but only on the fuel element of that allowance, which you work out using HMRC's official advisory rates. Stay with me. This next part is where we can find some real value for your business. We're going to cover some of the more complex situations that, believe it or not, affect a surprising number of small businesses. You'll want to hear this. Okay, here is a fantastic opportunity that so many new businesses completely miss. You can actually claim back VAT on purchases you made before you were even registered for VAT. For services, like maybe your accountancy fees, you can go back 6 months. And for goods, like a laptop or office furniture, you can go back a whopping 4 years, as long as you still own and use them in the business. It's a great way to get a cash injection right when you register. Now, things can get a bit tricky if your business sells a mix of things. You see, some sales, like providing insurance for instance, are exempt from VAT. If you only make exempt sales, you can't reclaim any VAT. But if you have a mix of standard and exempt sales, you fall into the world of partial exemption, which means you have to do some calculations to figure out how much VAT you can reclaim on your general business costs. But there is a lifeline, thankfully, and it's called the de minimis rule. Basically, if the amount of VAT that's related to your exempt sales is small enough, and specifically that means it's less than £625 a month on average, and it's less than half of your total input VAT, then HMRC lets you ignore all those complex calculations and just reclaim everything. This is a huge help for many businesses. We should also give a quick mention to the flat rate scheme. It's designed to simplify that for very small businesses. It lets you pay a fixed percentage of your turnover instead of accounting for that on every transaction. But there's a trade-off. You generally cannot reclaim any VAT on your purchases, with the one rare exception being a single capital asset that costs more than £2,000. Okay, let's be realistic. Everyone makes mistakes. It happens. The key isn't to never make one, but to know exactly how to correct it properly and efficiently without attracting any unwanted attention from HMRC. Here's the key number you need to remember: £10,000. If you find errors on past VAT returns and the net value of those mistakes is under this threshold, you can usually just correct it by making a simple adjustment on your very next VAT return. It's a relatively straightforward process. However, if the error is larger, over that £10,000 limit, you have to take a more formal route. The most important thing here is to be proactive. Don't just sit on it and wait for HMRC to find it. You need to formally notify them of the error, and you usually do that by completing and submitting a specific form, which is VAT 652. So let's bring all of this together. We've covered the why, the what, and the how. Now let's condense it all into a final actionable checklist you can use to protect your business and make sure you're maximizing every single legitimate claim you're entitled to. This is your strategic framework. Think of these 6 steps as new habits to embed right into your business operations. Constantly check your turnover. Be absolutely ruthless about getting proper invoices. Use an app for your mileage. Do it in real time. Keep guest lists for events. Make sure your digital records are properly linked, no copy pasting. And just do a quick partial exemption check once a year. Getting these right will transform VAT from a headache into a genuine tool for financial efficiency. So, taking all of that on board, just have a think for a moment. What is the single biggest improvement you could make in your business's VAT process, starting right now? Is it about chasing down better invoices, or maybe finally getting that mileage log sorted? Just picking one thing to focus on can make a huge difference. Of course, navigating VAT can honestly feel like a full-time job in itself. So please, do remember that this information is for general guidance only. It is not a substitute for professional advice that's tailored to your specific circumstances. If you want to make your VAT reclaims completely stress-free and make sure you're compliant, we highly recommend you consult a professional. You can contact the experts at My Tax Accountant directly for advice. And do subscribe to their channel for more helpful guidance like this. Thanks for your time.